A year after the financial regulator looked into the mis-selling of interest rate swaps to thousands of businesses, it's emerged that not one of those businesses has been compensated. Up to 40,000 of them could be affected, as our business correspondent Siobhan Kennedy reports.
David McEwen says his life has been ruined after he was mis-sold a complex financial product he believed would protect him. In 2008, he got a loan from his bank to expand his packaging firm, but was told he had to take out a form of insurance called a swap to protect him if interest rates rose.
They said, yeah, we'll continue to lend the money and consolidate all your loans. This time there's a slight change to our offer. You do need an interest rate swap, or you do need an interest rate protection. And
so it was sold to you as protection?
Yeah. And I was only shown one product, which was the structured enhanced collar, which I still don't quite understand what it was they sold me.
The problem is interest rates didn't rise, they fell, and that's when the hidden payments kicked in. Mr McEwen paid more than £200,000 to his bank, Lloyds. But then the banking regulator stepped in, and Mr McEwen told me there was finally hope the pain would end. This weekend marks a year since the financial regulator found mis-selling had occurred and told the banks to compensate customers. Yet 12 months on and not a single penny has been paid. And customers like David, who lost hundreds of thousands of pounds, still face an uncertain future. What are they offering you?
They've offered me a new, what they call a new simpler swap. The difference, they're saying this alternative product means that I am only due £38,000 plus interest.
So to be clear, you paid out £200,000. You thought you were going to get that back because the regulator said you should get that back. Mm-hmm. But the bank instead has given you another swap.
Correct.
Could you believe it? What did you think when they offered you that?
Yeah, I was absolutely devastated because for a whole year I'd actually been explaining to my family and my wife and how this is going to be okay, because somebody's actually come out and said that we've done wrong and everyone's going to do the right thing, and it's backed up by the regulator. So I couldn't possibly foresee this going any other way than the starting point being at least what I'd put in.
Whilst we will not comment on individual customers, fair and reasonable redress may be in a number of forms and may not solely involve a cash settlement, and can also involve moving the customer to a simpler product if that meets the customer's objectives at the time of trading.
Now, for the first time, a survey has attempted to quantify the economic pain of the swaps scandal. It estimates mis-selling to small businesses has cost the UK economy more than 400,000 in lost jobs. About 160,000 of those through direct cuts, and a further 250,000 in jobs that would have been created. It also estimates about 1.7 billion in lost taxes to the Treasury. Lost taxes from people like Mr McEwen. He says he's not going to accept Lloyd's offer and will hold out for more.